Hey guys, how's it going? Back with another daily update video. It is Monday, July 6th. It's a little bit later than my usual time. It's almost 7:30 p.m. and clearly the markets are closed, but I would say an overall odd day in the market. I mean, there's a lot of green on the board, so stocks definitely went up. I mean, if we take a look at big tech, Amazon was up 5.8%, Facebook 2.9%, Apple, Microsoft. I believe Amazon hit all-time highs today, and I believe Apple may have also hit all-time highs, but I'm not sure on Apple. But I know for a fact Amazon hit all-time highs, which is crazy. Disney was up 2%. Look at the semiconductor sector. They were all up 1 to 2% roughly. AMD was up 2, Micron 2, Nvidia over 2. Intel was lagging behind, but still up almost 0.7%. So a lot of green on the board here. So I did end up making one play. And the reason I didn't make more plays is because there was so much green on the board that in a perfect scenario, this would not have been a good time to open up a cash secured put. Because if we go red tomorrow or dip because of profit taking, or maybe some bad news comes out tomorrow or overnight, then my cash secured puts are immediately going to be worth a little bit less than they were today. In a perfect world, you want to sell a cash secured put on a red day. And then again, in a perfect world, the day after you sell your put all the way until expiration, you'd want the stock to go in the green, basically just to go up. So by selling a put on a red day, you should be able to either collect more premium for a similar strike price and or get in at a lower strike price. So if you were to get assigned shares, you would get assigned shares at a lower stock price. So that's why, if you can help it, I like to sell puts on red days, but I will say why today was odd. It's mostly because we really popped in the morning. I mean, the market opened up really green, like here's IWM, and then we just slowly bled off and then traded sideways. We ended up in the green, but from where we started to where we ended, it was kind of a letdown. It was like we just deflated the balloon all day long. I mean, take a look at IWM. IWM pre-market was almost $146. Look at that. At 9 a.m., it was 146 or 145.90. And then up until the market opened, it bled off a few pennies, almost 50 cents or so. The market opened, and then from 10 o'clock to almost 10:30, it went from 145 to 143 and change. It dropped $2 in the matter of 25 minutes. So I ended up selling a cash secured put on IWM at the $137.50 strike price, and I collected $59 in premium for that. So just to do some quick math, $59 divided by 13750, which is my total risk or collateral at risk, that's a little bit over 0.4% return on my risk. And if you follow me for a while now, you know that 0.4% is kind of my bare minimum. And I wanted to play it safe again this week because the cases of coronavirus are spiking. More and more bankruptcies are happening. More and more states and counties are reinstituting lockdowns. So I feel like with every passing day, more and more bad news keeps coming out. But for some reason, the stock market keeps going up. So at some point, there's going to be this rug pull where the stocks are going to start going down again. And I don't want to get caught bag holding shares of stock, especially now, because I find it crazy that some companies like Amazon are hitting all-time highs in the midst of this pandemic. So I don't want to be too aggressive right now, and that's just my personal style. So I want to play it really safe. So I want to get a 0.4% return on my risk or even less. I'd be happy with any gain, just because so far, if you've been following my videos for the past 2 months or so, a little over 2 months, I've already made a decent return on my money in these past 2 months, much more than I would have made if I had this money just sitting in a savings account. So I'm already in the green for the whole year. I would be happy if I didn't make another dollar for the whole year. I would be content. So I just want to play it extra safe because I certainly don't want to lose money, and then I also don't want to end up bag holding shares of stock because let's say the market does start dipping again, and maybe I want to buy stock for the long game. I want to make sure I have dry powder. I want to make sure I have cash on hand that I can use it to buy shares of stock on the cheap. Like let's say IWM dipped all the way down to $96 back a few months ago when we really were crashing down. If IWM gets to like 96 again, I would love to buy shares with the intent of holding long term, and then I could just sell covered calls on them. So not only would I get stock appreciation as hopefully IWM climbs back up over time, but I could also collect weekly profit or weekly gains on top of that by selling out of the money covered calls. So that's kind of my long-term goal, or my long-term plan, is that once we do eventually go into a recession, which I already think we're in, but once we confirm it, and once the market actually reacts appropriately, in my opinion, and we start dipping again, I want to make sure I have cash available to get into stocks at a cheap price. I don't want all my money tied up in shares of stock that I then have to kind of dig myself out of that hole. If that does happen, you can still sell covered calls on the way down, but like I said, it was going to be very hard to keep reducing your cost basis if the stock drops very quickly. So I want to play it safe. And the other thing was, by opening up a position on Monday, today, let's say come Wednesday, let's say IWM does start dipping and I start to get a little nervous because my strike is 137.50. So it's still within this Fibonacci range of this teal area between roughly 133 and roughly 141. So 137.50 is right about here. So you can see the last time we were 137.50, IWM didn't really like that and it kind of bounced right back up. So that was part of the reason why I also like that strike price. Now, the other thing was, if you look at the options chain on IWM, in terms of selling a put, which I did this morning, I sold this put right around noontime, around 12:20, 12:30 in the afternoon. And I did that because if you actually look at the graph for IWM, if we go back on Robinhood, you can see right around 12:20, right around here. And, I got really lucky because I timed it almost perfectly, because this is probably the lowest point of the day for IWM. So again, that means that I was able to lock in good premium and a good strike price. If I had tried to open up a put right when the market opened at, let's say, like 145, I probably would have had to get in at like 138, 139 to get a 0.4% return on my risk. By waiting, I was lucky enough to get in at 137.50. And then, to make things even better, the stock rallied a little bit because it ended up closing the day at 143, and I opened my position at 142.95. So that means that already today, if we go to look at the option chain, I've already made a few bucks. So looking at the options chain here, it's currently trading at 144.15. So if you look at 137.50, which is where my strike is, you can see that it's trading at $58. So I opened it at 59, but as you can see, the bid-ask spread is going to be from 56 to 59. So I've already made right now $1. This is going to go down when the market opens tomorrow, just because more time decay will have happened, depending obviously also on where IWM opens tomorrow. But this is the power of theta decay. I've already made $1, and the stock price basically traded sideways. And as more time goes on, I'll collect even more premium. Now, I will say that this is somewhat broker dependent, and I say that because on Thinkorswim right now, this option, this 137.50 option, is showing a mark price of $53. So according to the Thinkorswim platform or TD Ameritrade, I'm profitable by $6 already, whereas Robinhood is only showing a $1 profit because that's the kind of midway price between the bid and the ask. But I trust Thinkorswim more than Robinhood because Thinkorswim kind of tracks IWM in after hours much better. And in fact, if you didn't know this, you can actually trade IWM up until 4:15 p.m. on Thinkorswim. So you get an extra 15 minutes to be able to buy and sell options on IWM if you use the Thinkorswim platform. And also, the other benefit of Thinkorswim is that it allows you to trade IWM 24 hours a day. You can't do that on Robinhood. If you wanted to buy shares on IWM right now, it won't let you because I believe Robinhood's after hours trading closes at 6 p.m. if I'm not mistaken. I don't know because I don't really trade shares on Robinhood, so I'm not sure exactly, but I know Robinhood does offer after hours trading, and I believe it's still 6 p.m. But on Thinkorswim on TD Ameritrade, it lets you trade, I know, till at least 8 p.m., but certain tickers like IWM, it lets you trade for 24 hours a day. So I don't do that just because once you go into after hours trading, the liquidity is so bad, the volume is so bad, because obviously the majority of people are not trading at the time, that you don't get good fills and you don't get good stock prices. You don't get good prices when you sell, you don't get good prices when you buy. So I tend to stay away from it, but it is possible, just FYI, if you were thinking about switching from Robinhood to another platform. But that was the one and only trade I made today. I think I'm looking pretty good on it so far because I'm really hoping that after hours and pre-market, IWM opens even higher tomorrow. And like I said, if IWM starts testing my strike or getting a little too close for comfort, let's say tomorrow or Wednesday or Thursday, because simply of theta decay or time decay, I should be able to close out my position for a small profit and not have to stress out about getting assigned shares of stock. So that was the only play I made today. I was taking a look at AMD and Micron like I mentioned this week, but they really did not have good premiums today for some reason. I took a look at AMD options first actually, and to get in even at a 0.4% return on my risk, if we go to the option chain, I would have had to get in at around like $50 or so, which really at the time I was looking, the stock price was I think 52. So there's only a $2 buffer between my strike and the stock price currently. So it wasn't big enough for me. And honestly, I wasn't too impressed by the $50 strike if I were to get assigned shares. I was really hoping that I could get in like the high 40s, maybe 47, 48. But the premiums on AMD and also on Micron just weren't that great this morning for some reason. I guess there just wasn't a lot of volatility. But both stocks opened up in the green and traded sideways, and it basically held their gains that they had pre-market. They were both up roughly 1 to 2%. But again, looking at the Micron options, again, the premiums just weren't that great. So that's why I went to my third resort, which was IWM. And that's why at that time I felt like I was getting good premiums and good return on risk at a good strike price on IWM, which is why I made that trade. I still have a little bit of dry powder left because that IWM trade only took up $13,750 of my portfolio value. So I could still open up a position on AMD or Micron tomorrow if things are looking a little bit better. Let's take a look at AMD. So AMD also is showing a bullish trend based on the Ichimoku. However, I will say that AMD is kind of flirting with that overbought kind of threshold here on the RSI. So that also turned me off a little bit. If you take a look at Micron, Micron is also rather similar where it has a bullish trend based on the Ichimoku, but is also very close to the overbought category on the RSI. IWM is kind of right in the middle, around the 50% level or the 50 level. So again, I felt better about the IWM trade. I also looked at SMH, and that really took off. And again, it was very close, even closer than AMD and Micron to the overbought category. So again, I stayed away. And also the premiums on SMH weren't that great. For some reason, the semiconductor sector today just didn't have good premiums. Lastly, let's take a look at another stock I've been talking about lately, and that's Disney. So Disney was up about 2%. It was up about $2. So nothing crazy because, from the past few weeks, it was trading at 120 or above. In fact, it was all the way up to like the 127. So I kind of want Disney to get back up to that level, but I don't like the bullish trend right now because I was afraid that it might dip again because, again, there's no good news coming out in terms of cases in Florida or Disney's theme parks reopening. The only one good news I heard over the weekend was that Disney added a lot of new subscribers because they released Hamilton on Disney Plus over the weekend. So that may have accounted for the 2% bump today, but it really didn't jump that much, meaning it wasn't that much of a rally. I thought because Hamilton was so popular, maybe Disney would jump up or gap up a lot because people like Hamilton and they're going to subscribe to Disney Plus just to see it. But that really wasn't the case. So I'm still somewhat neutral to bearish on Disney because it really hasn't done much. If you actually look over the past couple of days, it just goes up and down, up and down, up and down between roughly 112 and 114. It's been trading in a very tight range. And actually, if you look where it closed today, it's where it's peaked the past couple of days recently. So if the pattern is going to repeat itself, then tomorrow we're going to have another red day. So if that's the case and you were looking to get into Disney, that might be a good opportunity if we do sell off tomorrow, just to get in at a good strike price. But again, not financial advice. I'm just noticing a pattern here. But again, I still don't feel like that's a good price for Disney. I would love for Disney to get sub 100 again, like it did, when we were in peak crisis mode. Disney was all the way down to $80, which I would love to get Disney at 80 again. So we'll have to wait and see to see if we can dip again and if Disney gets to 80 or less. But I think from a long-term play, owning Disney at $80 would be awesome. So let's just take a quick look at what some of the popular stocks and options were today. So while this page refreshes, so we can see AMD was actually number one. Highest volume, almost double that of the second highest volume stock, which is BABA. But that's interesting. And that $55 strike call was the most popular option. So if AMD dips tomorrow, if we go into the red, then maybe tomorrow will be a good day to open up some positions on AMD in terms of the cash secured puts, because it seems like people are bullish on AMD right now. But here's another AMD call, 54 strike. So 54, 55 strike. So people are bullish on AMD because AMD is trading right now at $53. So that's good news, especially if you don't want to get assigned shares. So I'll be definitely keeping an eye on AMD tomorrow morning. And lastly, let's take a look at the Fed's balance sheet. So, I talked about this in a recent video where on June 10th, when we kind of peaked in terms of the amount of printing the Federal Reserve was doing in terms of printing money and the quantitative easing, that same day was also when the stock market kind of started drawing down. So I made it a point to keep an eye on this because the less money the Fed prints, it seems like the market overall keeps going down slowly. So if we just go back to IWM and look at June 10th, so right here, this peak is June 8, here's June 9, here's June 10. So that day, the next day, IWM went from 148 to like 135, which is crazy. And you can see ever since then, it's never gone back up to that peak around June 10th. So I'm a bit concerned because even now, as of July 1st, that value keeps going down. So in my mind, the Fed is printing less money. Maybe they're trying to back off. And that concerns me because then is the stock market going to start backing off and backing down as well? Just something to keep an eye on. Obviously not financial advice. This is just something I've noticed and it's just a hypothesis that I have. But I'll definitely keep an eye on it to see if my theory holds true. So let me know if you opened any positions this week, and if so, what did you open? Let me know what your overall plan is for this week. And as always, if you have any questions or comments, leave them below. We're getting very close to 1,000 subscribers. So once I hit 1,000, I'll definitely open up my Discord server. And what I plan on doing is for all the people, for my 1,000 subs initially that helped me get to this point, I'm going to open it up so that kind of my original subscribers, my original fan base is going to be able to get into the Discord server before I potentially open up any sort of paywall to kind of keep the riffraff out. So let me know. Make sure you turn on notifications. Make sure you subscribe because I'm only going to leave it open for free, probably for a couple days at most, because I don't want that video to be live for the end of time and then people keep trying to get in for free. So I'm only going to open it up once that video goes live for probably a couple days at most. So make sure you turn on notifications so you can watch that video when it goes live. And I'll remind you again when we get closer to that date. But thanks for tuning in. Thanks for subscribing. Thanks for watching. And as always, happy trading.